Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking in on the financial sector, which has been on absolute fire since the election. And we're going to start looking at FAZ here, which is a bearish 3 times ETF against the financial sector. And just keeping an eye on normal healthy consolidation to occur in the banking sector, which would mean FAZ sees some short-term upside. So you can see FAZ is building support at $21. We have a clear stop loss level where if we were to break the low we've seen so far of 2089, that clearly means it's too soon and the bears are still in control of this trend, which means the bulls are still strong on the banking sector. So we have a clear high of this bounce at this point of 2207. And if we break that level, the bounce is underway. We already have a bullish MACD cross. And if we break 2207, we should see a bullish TCG cross with the 4-period crossing the 8-period exponential moving average to the upside. Middle Bollinger Band resistance continues to drop. That would be the next level that we look at. If we break 2207, we can see we've been oversold now for almost 5 weeks. So we are definitely due for a bounce. And we can see we haven't seen 2 solid green days in a row in FAZ since the election. So the bulls had a solid green day Friday and another one on Monday would be the first time we've seen that much strength since the election. Weekly time frame, bullish reversal candlestick, and we closed right at the lower Bollinger Band resistance on the daily, actually above it by 1 penny. But what stands out is the volume. It's the highest volume we've seen in the past month, and volume climaxes often signal the top of an uptrend or the bottom of a downtrend. This isn't exactly a climax, but compared to the previous action, it does show some nice bullish buying of that dip and looking for a short-term bounce. FAS is the bullish 3 times ETF. You can see we're topping out here, but it is normal healthy consolidation at this point. We're on the verge of a bearish MACD cross. It will become more than normal healthy consolidation if we break this low of 42.56, as that would mean we have a lower high and then a lower low, and we would look to test the middle Bollinger Band as the next support. So pretty much the exact opposite of everything that I just said for FAZ. We are still above the upper Bollinger Band on the daily, or the weekly I should say, so we are still in breakout mode, and we have been there since the election. So if we see another red week next week, we will confirm the bearish reversal candlestick, and we will lose the upper Bollinger Band as support, which would indicate consolidation is coming. Looking at some individual banks, BAC and JPM have been some of the strongest, and it too is looking a little toppy. It's all about the low of this consolidation of 22.21. If BAC breaks that level, we already have the bearish MACD cross, and again, middle Bollinger Band would be the next support level we're looking at. You can see the red Marubozu candlestick on Friday with the bears controlling the entirety of the day. So if we break 22.21 support early next week, we know the bears are in control for further downside. Pretty much every individual bank name is forming a bearish reversal candlestick on the weekly time frame after 5 extremely bullish weeks in a row. So you can see BAC clearly has that. If we lose the upper Bollinger Band on the weekly next week, that bearish reversal candlestick will be confirmed. JPM on the daily, low of consolidation. 83.76, and the same thing the weekly time frame, bearish reversal candlestick, upper Bollinger Band support must hold. So pretty much every single individual name you look at, it's all about the low on the daily chart of the last consolidation. If we break that level, the bears are in control short term, and it's all about the bearish reversal candlestick on the weekly. So we can just run through them. WFC is the most bearish out of the banks, and it already has a significant pullback at this point. But we look at the strong bank names, GS, bearish reversal candlestick at the top. We got C, bearish reversal candlestick at the top. We just saw BAC and JPM. So very clear that the banking sector is looking toppy here, and there could be some nice gains. And when you're looking at individual names, we can see like C here, we consolidated already before heading to the upside. So when we consolidated on that week, that formed a support level. So we look at GS compared to that, a little bit of consolidation, and that's why BAC could see some nice pullback, because we pretty much haven't consolidated because of how strong the bulls have been. So we have more of support built on the names that have consolidated on the way up compared to those that have not. So it's going to be a very interesting week. Obviously, the overall S&P 500 and what the market does is going to have a factor. If we continue to consolidate in the market, we will look to continue to consolidate with the financial sector as well. So we'll see how it all plays out. Again, FAZ would be the way to play it if this bounce continues in FAZ. I appreciate you watching. We'll check back in. Have a great rest of your weekend.